All right, let's begin. Once again, welcome to the channel. Thank you so much for spending this evening with me in this live stream, in this live analysis of the markets. And I'll be briefly going through the markets, what has been happening so far. And then after that, once the market starts, the market will be opening at 9:30 in about 15 minutes time. So once that open, I will start to enter my trades. So the main thing that I want to do today would be to enter a 0 day to expiration iron condors on the SPX. So this is the daily chart for SPY. So SPX is just 10 times the value of the SPY. All right. So let's start off first with the SPY. Now, so far the SPY S&P 500 itself, it has corrected about like from top to bottom almost, I think, 7.5 to 8%, right? 7.55%. So right as of last Friday's close, it is sitting very nicely on the 50 SMA, 50-day simple moving average. So it seems like a near-term support has been found. So if so, that's great. Then market can continue reversing up, and then hopefully that will give us some opportunities to swing trade upwards, right, and benefit and capture the upside from there on. But however, take note that there is also a chance for markets to still continue correcting further downwards. And if that happens, the next level that we want to look at will be the $321 level, about there, right? So where did this level come from? It is the 20-week exponential moving average. If we switch up to the weekly chart, so there we have it. So the 20-week exponential moving average, the 20 EMA on the weekly chart right now is at 321. So this might be the next level of support that the prices might be hitting to if the prices continue correcting downwards. So just something to look out. All right, so that's just a little bit about the S&P 500 itself. So currently, right now, pre-market is at 377. So if we look at where 377 is, it seems like pre-market is doing rather well, right? It's going to open right at the high of the previous day's candle, and that's just the open. So how the day will progress, we do not really know. It can go up, and that should be a clear sign that uh, the near-term bottom of the correction is likely to have been found, and price might be reversing upwards from here on. But if prices continue open up high and then form another red bearish candle, then it's hard to say. More downside might be coming, right? So just something to bear in mind. And even if prices close up higher decisively, things might still be unstable in the market, right? So especially right now, we are heading into September and October. So these are months that have been known to be rather weak, where the market's performance has been known to be rather weak. And furthermore, we are heading into the election month, which is in November. So market might be volatile and appear shaky from here on. And just like what we have seen in June, although we have a very strong green candle, prices still move sideways for a while, for another 2 to 3 weeks or so before breaking out higher. So this might be another scenario that we may experience moving on forward. So it might not be a clear wave up, but rather in a sideways motion and slowly inching its way up. Right. So just some possibilities. Yeah. And so let's start moving into the analysis of the trade that I'm about to enter. So for those of you who are not so familiar with options, so basically what I'm aiming to do when the market open is to sell an iron condor. So basically what an iron condor means is that I will be flanking the prices. I'll be selling calls and puts on both ends of the of the price, right? To flank the price. And if prices can stay within my range, so for example, I've marked out 3435 and 3275. So let's say I'm going to sell a call at at 3435, right? So I'm going to sell a call. And next, what I'm going to do is I'm going to sell a put at 3275. So these flank the prices and give me an inner boundary. So if prices can stay between this region, I will get to I will stay my trade will be profitable. And if prices move too close to my boundary, then I might have to close out the trade for a loss. So that's basically the gist of it. And we should never sell naked. Right, so what I'm going to do is I'm going to buy an insurance further down, buy a put, and also buy another call, right, to serve as a reinsurance. But yeah, so that's basically the gist of the iron condor. And so a few rules that I'm going to highlight to lay out straightforward would be that the calls that I'm interested in will have a delta of 0.05 on both ends, right? So I want to sell the 0.05 delta, that will be somewhere around here. 0.05, so this is the column for delta, and 0.04, 0.06. That will have a strike of 3290, 3295. Of course, this is not so accurate. When the market opens, things will change, and then we have to reanalyze again. But that's for now. So I'll be selling 3290, 3295, something somewhere like that. And that is for the put side. For the call side, similarly, I want to sell with a delta of 0.05 or so, around there, 0.05 to 0.1. So 5 delta to 10 delta, in other words. And that we will have a strike of about, delta is over here, we will have a strike of about somewhere in this region, 3410 to 3425. Right, so these are the strikes that I will be interested in. The next criteria is that I want my strikes to be far away from the past few days candles. Right, so just now we have seen the put side with a delta of 5. We will have with a delta of 5, the strike is at 3290. So 3290 will be somewhere here, about there, right? So what I want to see is that this lower boundary should at least be lower than the previous low of the past few candles. And for our example today, it is this candle over here. So it has a low of 3310. If you focus on the number over here, right? And then mouse over here, you can see 3310. So 3290 will be something that we want to look out for. We'll be interested in selling. And on the call side, we will be looking at, call side is over here, 3420. And 3420 will be somewhere here. So it is slightly touching into the wick of the last few days candle. So it's, in a sense, it's not really that ideal, considering that market will open at somewhere 3370, right? Pre-market for SPY is 337. Yeah, so we will see how things goes when the market opens. All right, so just 4 more minutes to market open, and meanwhile, I'd like to just like to highlight that whatever trades that I'm placing today, please do not follow them if you are not familiar with what I'm doing and if you're not clear with the things that is going on, right? So if you have any questions along the way, feel free to just type into the live chat. This is meant to be an interactive session, so I will be more than happy to address your questions and to chat with you, or you can also throw off some trading ideas or investing ideas into the live chat, and then we can have a good discussion. And if things move on smoothly, if the market performs according to expectation, then I might have more trades to enter. Otherwise, we will see we will act accordingly to plan. Okay, so Pre-market wise, so these are my watch list at the left-hand column of the screen. You can see some of my watch list and my trading positions, right? So if you have been watching my videos that I've uploaded, so I've been rather heavy on Bank of America, selling a lot of puts and calls for what is known as the wheel strategy. And you have, and yeah, so far, Bank of America, you can see profit wise, it is currently profit year to date is about 1,500. So with an account, I've allocated a position size of about 10,000 to that. So that's already like 15% return, right? And this was ever since April. I started this position on Bank of America since April. So quite a good return. And depending on the situation, I may be selling another uh, cash secured put on the Bank of America later during the market open. As you can see, I have a position that is expiring on the 18th of September, which I've sold a month back, and 18th of September will be this Friday. So if this Friday, as of this Friday, if prices can close, if BAC can close above 25, the previous premium that I've collected, this 79 cents, will be mine to keep, right? And that will be my profit. So in 79 cents, if you divide it by the strike price 25, that is definitely a premium of more than 2%. So by selling that every month, you can actually consistently gain about 2% of your position size every month. And if you'd like to know more about this strategy, wheel strategy, you can go over to our channel, and yeah, so the video is over here. So just, we have a lot of other uh, educational materials as well. So for options trading, if you are not familiar with options, then the basics are all covered over here. What are call options, put options, all right, your deltas, and I've also went through how to set up your platform if you are using interactive brokers or Think or Swim. And lastly, we move into the more advanced stuff, which is the strategies themselves, and also the pitfalls, right? So I always say that to trade options, your fundamentals in stocks, all right, so that's the opening bell. So your foundations in stocks and price movement and technical analysis must be great in order to master options perfectly. So for that, we have our other videos and content in the channel. So feel free to check them out. All right, so and as market opens, so let's go into, I'll be looking at the minute chart for this. All right, so market gaps up. And if I zoom out on the price range, these are the boundaries that we have identified previously. So the deltas have changed. VIX is currently at 26.15, significantly lower than last week's. Last week's cap was at 35, if I remember correctly. Yeah, so delta of 5 to about 10, that will be somewhere around here, right? So this is the put that I'm looking at. Let's go back to the charts. It still hasn't really moved. So prices are moving up. Okay, since prices are moving up, let's look at the call side first. So ideally, I want to sell a call when prices have reached a high. So this gives me more buffer range, right? So call side, maybe I'll be looking at 3425. Where's 3425? 3425 would be somewhere here. 3425, I'll sell the 3425 and I'll buy back to reinsure at 50. I'll buy back at 50 points wide. So 3425 plus 50, that will be 3475. And this is currently going for 75 cents. Not bad, not bad. But let's wait for a few more minutes for prices to settle. Meanwhile, I'll go over to my trading platform, which is the interactive brokers, and search up the strikes. So 3425 will be somewhere here. Yeah. Normally I trade the delta 7 option when doing this strategy, right? And as you can see, these options they expire today, so there will be a very quick decay in the premium. And that what it means is that as long as prices don't hit either boundary, I'll get to keep everything. On the put side, 3310. 3310 is somewhere here, which is 3310. Which is basically last Friday's low. Are you guys still with me? All right. You should look at the put side. Yeah. So I want to buy, I want to sell, and then buy the 3260, right? Contracts of this according to my account size, right? So let's enter 95 first. So double check. Currently is 0.95. 3310 delta is 6 delta. Move on to the rest of the stuff. 3420. All right, 3420 then. I'm gonna sell this 3420 and I'm gonna buy for 70 cents. 3420 sell and then buy a 3470 here. So is there something wrong? Sell and buy, right? Yeah, so for 70 cents. Double check. All right, it has gone to, okay, prices have shot up. So that's why we see the the contract is going for more now. In that case, we can, what if we shift up our strikes? We sell these and then look at the 25 and 75 strikes. That will be going for 55 cents. Not that attractive, 55 cents. Okay, let's wait for prices to settle before we enter the trade. Meanwhile, let's ensure that we enter our put side of the leg. So let's go down a little. I wonder what is the price of it now. 3310 and 3260. 3310. So I sell. I'm just worried that prices will continue going up higher and higher and then touch the upper boundary, right? So Are there any support or resistances? Looks like one is coming up at edge 2. Or let's go with the 2.5 and 7.5 spread instead. So I'm going to cancel off this, and then 3.425 buy, sell, and then 3.475 buy. Yeah. You want to be very careful when entering this because one mistake, it can be rather costly. 70 cents. All right, let's go. We'll just wait for it to fill. Meanwhile, let's look at the put side of things. So given the current bullishness, I think we should be rather safe on the put side. 3320 and 3270. I'll be
Order
entering that.
filled.
All right, so the bear call got filled. I'll just cancel off
Order cancelled.
the put side, and then let's enter again. 3320, sell, and 70. 20 and 70 for 80 cents. $75 now. Looks like prices is going up higher. All right then. Or maybe I should wait for prices to come down before entering the put side. What about other stocks? So even Microsoft, one of the tech is going up quite by a lot. Yeah. So it looks like it's quite bullish across the board. We have Apple up $3 as well. So Adobe, all these tech stocks are all, yeah. Price is still going up higher. All right, let's not forget to enter our stop. So to protect and not lose more than 2% of my account, I'm going to have to place a stop loss order. So I sold the 3425 call for 0.75. So what I'm going to do is I'm going to set a stop loss at 3 times this amount. So $2.25. So what is going to happen is that I'm going to right click and then click on close, set it to stop, a stop order, and then 225. So when the call that I sold 225, I'll get out for 2 times the loss. And 75 cents times 2, that will be, because I already collected 75 cents upfront, so 3 times 75 cents, I'm actually only losing 2 times of 75 cents, and that would be $1.50. Multiplied by 100 shares, that will be $150, and 2 contracts, that will be 300. So still lesser than my still lesser than 2% of my account. All right, so I'm going to just submit it first. And looks like it's really bullish. going for 90 cents. So once this reach 225, I'll be out of a trade, right? So 225 will be somewhere, it's just like 2 strikes away. So meaning if it moves up another 10 points or $1 on the SPY, I'll be out. Right, okay, I also see a lot of questions, so hang on. I'll be coming to those comments shortly. Maybe we should not wait for the put anymore. Right, so the put that we have waited on is only worth 45 cents right now. All right, so what did I miss? All right, so Mohammed, you asked the intrinsic value calculator for REITs. So for REITs, we don't use the IV calculator. So REITs, valuation wise will be similar to that of the banks, right? We just use price to book, or in the case of REITs, it will be price to net asset valuation, which is price to NAV. Just another name for price to book. Yeah, basically. Come down, come down. I would like prices to come down. So currently, these are my other positions. So I've also entered a diagonal spread on 10 cent today. So after seeing that huge big green candle up, right? So I'll show the charts later. Yeah, and for my other spreads, so you can see my portfolio is heavy on options and mainly focused on diagonal and calendar spreads, right? So these are just some of my options. IWM, sold a, I have a diagonal spread with a sold call of 151, right? So right now prices is at 152. A bit, the call that I sold is already a little bit in the money. So I'll be looking to roll that forward soon. And next J&J is still below the sold call, so it's fine. Pepsi Cola is also slightly in the money. And I entered a bear put on the Qs, so it looks like it is not going to be profitable anymore, given that the trend has been reversing up for today, right? But this expires at the end of the week, so we will keep an eye out for that. And for Starbucks is also way into the money. But despite that, these spreads are structured in such a way that even when the sold calls are in the money, I'll still be in somewhat of a profit, right? So my profit zone is rather wide, which is why I can buffer for huge movements in prices, either to the upside or the downside. So we are seeing a very narrow consolidation on the S&P 500, the SPY right now, SPX. So normally what happens after this is either it spikes up or it spikes down. Breakout or breakdown, right? So it's either one. And given the current trend, if it goes up, which has a higher probability, then my calls, my bear call on SPX will be expiring. I mean, will be stopped out. I just wish prices can come down, so and then I can sell a 3310 and then call it a day for this trade. Right now, if I were to sell a put, it would be at 3330. 3330 would be just below the 200-day moving average and above the previous day low. So not very ideal. It'll be somewhat risky, but considering the current price movement, you can also argue that it might be rather safe and not easy to hit, right? Because there's a lot of moving averages beneath it. Let's go with it then. Let's not wait anymore. Sell and buy for 80 cents. Three 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 zero 3280. Did I enter correctly?
Order filled.
All right, the order has been filled.
Order
So
cancelled.
let's go ahead and place our stop. So that was the bull put that I sold, 3330. Let's close it. Enter a stop order. It was entered with $1, uh, $1 in premium. So 3 times of that would be $3. $3 stop at $3, right? So submit. Up the boundary 3330 and 3425. So this is my range, right? As long as the SPX stays within this range and do not move too close to to the to either boundaries, I'll be safe and I'll get to keep the premium that I've collected today. So for both of these trades, I've collected 80 cents and 70 cents. So that's 150. 150 and multiply by 2 contracts each, multiply by 100 shares per contract. That'll be $300 in premium that I'm collecting a day. And that whenever there's a option that's expiring on that day itself. So basically for the SPX, options expires almost every Monday, Wednesday, and Friday. So these 3 days we can do it, right? So today is 14 September. 16 September, there will be another one, and I'll be doing it again. And then the next time it will be on the 18th, which is this Friday. Right. So if I don't get stopped out and I don't use up my day trades, I'll continue entering this. I'll continue entering this strategy for the account. And so far, this is my journal. So if you just take a quick look, yeah, so basically, so far I've been in 18 trades. So if you consider the call leg as one trade, the put leg as one trade, that is 18 trades. But if you consider in terms of days, that is 9 days. And out of the 9 days that I've traded, basically one of them and another one, 2 days. 2 out of the 9 days are losing days. Right, and this one, the 4th of 9, it was a very lucky day. So it was supposed to be a loss trade, but the market dropped down, corrected downwards very drastically, such that so you can see my sold put. So the the top line here is the sold put. I got stopped out, but I only entered the stop loss for the sold put, right? My call was my the put that I long, I do not place any order on it. So it is still there in my account, and it will either expire worthless, or if market move very strongly in that direction, then the long contract, which is the put in this case, will stand to gain in value. Right? So you can see I entered when I entered when I enter this put, I bought it for 27 cents. When I exit it for $9. Right? And that in itself is like a 1,800 profit. And minus off the loss that I incurred on the sold put, I still have a profit of $1,200. And this is in addition, and I mean this is not including the $200 premium on the call side, right? So this is, I must say, a very lucky day indeed for my account. And if we look at the current situation right now, 3425. So basically, where are my 3330 is here. So I'll stop out when this become $3, and 3425 is over here. I'll get stopped out when this becomes 225, right? 3425, 225. Yes, correct. Yeah. So just quickly allow me to quickly jot down my VIX for today. So today when we entered the VIX was, let's just key in the VIX right now. And the IV percentile of SPX itself is at 20%. So this volatility, these are 20%, right? Okay. Growing Wealth community chat. So I haven't had a chance to really interact with most of you guys, right? So I would like to use this chance to really find out more, yeah, and also to share more if I have anything of value to you, of value to you guys, right? All right, so we can just leave this aside. Previously, I mentioned about 10 cent, right? I entered a diagonal spread on 10 cent. So there was 10 cent trading in the Hong Kong exchange with a ticker symbol of 700, right? And this is the chart. So you can see 10 cent is very nicely to and fro within this consolidation range, right? Initially, I wanted to sell a put, right? But I was hesitating, waiting and waiting, don't know, waiting for what. And then as of Monday, which is today's open, so prices just kept out so high. And then when I look at the option chain, there is really not any value in the strike call anymore. So there's really no point in selling the I mean the put, sorry. 500 strike put, yeah. There's no value in selling that put anymore. And so I came up with another idea, which is to get more involved in the stock, either via a long dated call. So what I did you can see my account. So what I've done is to buy the March 30th 2021 call with a strike of 470. So this is deep in the money. And when I long this deep in the money call option, what happens is when prices go up, prices for 10 cent goes up, then my long call will gain a lot in terms of value. And at the same time, expiring on the October of 29, which is next month, the end of next month. And the strike for the sold call is at 560. So guess where 560 is? It is at the upper boundary of the consolidation. So basically what I'm saying is that if prices were to continue in its sideways motion, not exceeding 560, then this 560 call premium that I collect, and at the same time, my 470 call will lose some value, but not as much as this short-term call, right? So overall, net, I'll still be in a profit. And if prices go up short above my 560 sold call, then I'll just roll this out, right? The strategy for this video will be yeah, I'm still in the midst of creating the tutorial for that. So just keep a lookout in the channel. And yep, at this point, for those of you who are still with me, I'll appreciate it so much if you all can show your support by clicking on the like button. And if you guys have any friends or networks who would like to learn more about trading or the stock market or investing, you can share out the link to this live stream with them. All right. So Zetches, I see you join into the Iron Condor, so the 0DT Iron Condor, is it? Which strike do you get? Just curious. Is it the same as me or you entered it way earlier than me? I understand that I took quite a long time to enter the trade today. Yeah, so it was half an hour already. Yeah. So that is for 10 cent. So I'm also interested in selling another put, cash secured put for Bank of America. So especially now you see that mm, let me change the settings. So yeah. So you can see prices bouncing off the 50 MA, right? So previously I've drawn a support, uptrending support that has been respected quite a few times. And then this time round it suddenly broke. But despite having broke through this uptrend support, right, I still have faith in the stock itself, right? I believe the banks would be rather stable, and if not going up, then it should be rather staying sideways, right? I think that further downside should be rather limited because there is quite a lot of supports underneath it, right? We have three moving averages, and then we have also the $22 zone. And this $22 zone, if we trace back, it was respected rather well back in like 2016, 2017 in this period of time over here, right? And then respected once more over here, and only broken through in the March crash. And right now it is back. And when it recovered back, it visited this area again and can see this touch and very strong bounce back up. So yeah, so that's my analysis and reasoning for Bank of America. And what I've said on the downside, you can also apply that for the upside. There's also a lot of resistance on the upside, right? You can see the $26 support. I mean the $26, 26.50 resistance, the 200 SMA, and then there's also further resistance, more resistance further upwards. So 16 October, there's only the 25 strike going for 80 cents. So when I sell a cash secured put, I want to ensure that the 80 cents 80 cents divided by 25, which is the strike. So this is a 3.2% premium, right? So if I sell 80 cents on a 25 strike, basically the account will block off $2,500 dollars of buying power from my account. And what I get in return is a profit of 80 cents, which translates, which I mean, when you multiply by 100 shares, translates into $80. So, and that in itself is 3.2% of the buying power that I'm blocked. And to me, that's a rather good deal. I don't know about you, but anything above 2% is already very good, right? So if you can do this monthly, 2% every month, in 12 months, which is a year, you have 24% return, right? And the best is to execute this strategy on safe stock. So safe stocks like Bank of America, JPM is a bigger bank. If your account size is bigger, then go for that, right? Yum China is another one. To me, it is fundamentally strong and also is fundamentally strong and quite stable as well. Yeah. So Merck is another one you can consider that I've been eyeing for some time. But the problem with this is that, yeah, Starbucks is also another one, right? So these are all strong and stable stocks to sell a secured put on. Yeah. The only limitation is your account size. And for me, 25 25k a position, 50k for Yum China, which I've sold one previously, right, is in fact already a bit stretching it. So yeah, I wouldn't be selling cash secured puts for stocks that's way worth much more than this. Yeah, even though I'm tempting to. Yeah, you sold the same. You did the same as me. All right. Let's hope that we can stay safe in this trade today. Currently, the bear call is taking a lot of heat, right? SPX is already 3394, almost 3,400. And what news does it have? US economy, nothing much. Nothing too happening. Microsoft, all right, yeah, Microsoft just lost the way. If prices go up here, then I'll be in a safe position, right? What about you guys in the audience? Any ideas or any things that you all are looking at? So Microsoft is currently in the middle of nowhere. Hmm. Yeah, right away I can already point out a resistance over here at 217. The consolidation between this range, but really not that nice, I feel. Yeah, right. So this doesn't respect it too nice, that nice. Although this one here, this one here, this one here, here, and currently right now. So we have to see how it develops. So if Microsoft can hit the 217 or 216 and come back down again, then maybe we can consider something like a calendar spread, right? So, but right now I'll just leave it on the fence. So another, I'm more interested in MET. So this stock was raised up in the group chat by one of you guys. What you sold the 3425. Oh, you got the 3425 too at much later than me. All right. All right. Good luck to us, to all of those that are entering the 0DTE iron condors today. So MetLife is also another. This is an insurance stock. The fundamentals were quite good. So if I have some time to go into it quickly, routers, Met, right? So this is another stock that I'm thinking on doing the view strategy on as well. Yeah. So right, total revenue, you can see it is quite stable, and in fact also increasing over the years. Um, Net income, ignoring 2015, right? Net income, if you ignore 2015, is also still quite good. And then we have the cash flow. Cash flow, cash from operating activities, 14, 14, 12. Okay, the cash is flat. I'll say that this is rather flat. Yeah, so this is the only not so nice one out of that. Yeah, so for the first step, MetLife fulfills quite well. in terms of revenue and also the net income. And if we go over to Finviz, Finviz can tell us a lot about a stock as well. Right, from here we have the growth rate. The growth rate is on the low side, but and the ROE is also slightly below 15%. The current ratio, where is it? It doesn't have a current ratio because it's a insurance company. Yeah. So PEG ratio is 2.08, but when I calculated the intrinsic value is surprisingly quite high. So it's mostly from their cash flow, which I used 12,000, which I've averaged where is it? I've averaged it out to be about 12,000, and then it also has quite a lot of cash and equivalents, right? And not so much of debt, I think. We have to look into the valuation again, but that's MetLife for you right now. So yeah, another another of the candidate that I think is likely to be moving sideways from here. So either a cash secured put or a calendar spread. And let's look at our options. All right, so if we go over to options, option is quite well. There's monthly, I mean quite good as well. There's monthly and the weekly options. So if we sell the 37.5, where is that? 37.5 is just nice below this, below the recent candles. If you want to go lower, it would be like 35, I think. Yeah, the next one would be 35, which is too far off. But if we sell at 37.5, 37.5, that is also about 3%. Yeah. If you look at a further out one, 39. So normally the weekly options, they have tighter spreads. I mean tighter intervals in terms of the strikes. So it's easier to control. But the downside is that the spread might be wider. So yeah. So you can compare and see which one appeals more to you guys. And if we were to do a calendar on that, let's look at 15 Jan is 4 months away. 19 March is half a year, half a year away. 15 Jan then. And let's say if we take a 37.5 call, buy that, and then we sell a monthly call at 40 strike. This is going to take up 280, so which is $280. And if we analyze, so our break-even point for this trade will be 37.61 and 46.27. So about 37.50 and 46.20. So 46.20, is that 46.20? 46.20 is quite high up, so no worries about that, right? And then 37.50 or 37.60 would be somewhere here. So if it falls below quite what do you guys think? Anyone of with experience in diagonal or calendar? Yeah, so and I sell the 60. I mean, I buy and sell the 40 strike. If I buy and sell the 40 strike, then the profit range should be 37 to 43. 37 to 43. Yeah, still the downside is really not that satisfying. Hmm. All right, let's skip these then. Let's go ahead and analyze some other some other candidates. So not really satisfied with with the outcome. The next one that I have in mind is the exchanges. So first one up is ICE. The ICE is showing a rather nice pattern on a very nice bounce off the 50 SMA, right? And dividends is coming up tomorrow, but that shouldn't matter much. Right, so this is the history of the stock. It has been in a consolidation for some time before the before breakout and then broke back in and then break down from the March crash, and then right now it is where it is today. So yeah, it looks like okay, one thing to take note would be that there could be a potential resistance somewhere here. Once you can argue twice or twice here, third time over here, and then yeah, whether or not it will act as a resistance again, we will have to wait and wait. We can only wait to find out. But yeah, an idea on this would be to execute a bull call spread. So maybe you buy the 100 and then you sell the 107 or 106. Will that be attractive? Let's look at one month out. So 16 October, if we buy, all right, there's not much of a choice in terms of spread the spreads. 105 and 110, 70 cents. And what do we have? We have max profit being 430 and max loss only being 770. So it is a $70 trade in exchange for $430 max profit. If prices can go up to 410, which is quite high, I think, which is why on paper it seems very good. But on chart, when you look at 110, where is it? 110 is like here, right? So in a month's time, do you think it can hit? Mm, maybe not. But if in a month's time, if we can hit 106 or 107, what will be our profit like? So to check, let's change up our date. So expiring on 16 October. So let's say in a month's time, let's say 1 week before the expiration, and it is at 1 week before expiration, it is at 107. The profit will be somewhere about 170. So it's almost a 2:1 return. You risk 70, you make 170. If prices can hit, if prices can hit the previous high, which is at 107, 106, 107. So yeah, I'll leave that out to you to see if it appear attractive and appealing enough for you. Another way, which I'm more fond of, would be again spreads, right? So if we look at spreads, to $100. Where's $100? Wow, is at this is currently is where the price is. No wonder I can't find it. Yeah, so once again, not looking very good. Yeah, doesn't excite me. Besides ICE, we have another CME, which is also another exchange. This exchange gets is involved with options also. Yeah, so you can see currently prices is at 165, which is around here, and there is somewhat of a support. There's a lot of horizontal support and resistances on this chart, right? And I'm about to draw another one at 162. So historically, 162 has been tested a few times, acting as a resistance once, support once, and not so much here. So you may think that maybe a near-term bottom for CME has been found, and yeah, so what are the ideas for this trade? Again, it will be perhaps another calendar spread if you are neutral on this. If you want to gain more on the upside, if you think more upside is about to come, then a diagonal spread, right? And for ICE and CME, so these two are rather strong companies as well. So you are free to go through the analysis on these companies, and you can see for yourself how much do you like them in terms of fundamental strengths, and if you like them to be part of your investing portfolio, right? So let's look at our choices for this. Hmm, the strike is rather far, 165, 170. So what about the January one? The January I can buy the 165 and maybe sell the 9 October with 25 days to expiry and sell the 167.5. That will cost $700. And our profit range will be from 160 to 177. 160 is in between these two supports, so it should be rather looks okay to me. And 177, oh yeah, 160 looks okay, although it might be a bit slightly riskier, yeah, on the downside. 177 is the previous swing high. All right, then let's enter this. I'm going to enter this as a diagonal spread. Okay, not so much of a diagonal spread. This is more to be like a calendar spread, right? Just that there's a bit of a skew towards the bullish side on the sold call. So I would still treat this as a calendar spread actually. All right, and our iron condor is still equal on both sides. So the bear call is at a loss of 118 temporarily. Let's see how it will go. And let's go to trade our CME. CME, okay, I want to sell the 167.5. Okay, not the 18th September. I'm interested in the 25th. No, what was that? The 9th October. 9th October and the 15th January. Right. Okay. So I'm going to sell 167.5 and I'm going to buy the 165. Currently going for 685. Let's take a look again. Where is our max profit? Max profit is at 167. 167 is just around here, in the middle of nowhere. So, yeah, as long as it can stay in between these two zones, I'm happy. All right, so 160 and 177. Okay, I'm going to go ahead, 685, submit order, and
Order filled.
right, that's quick. All right, and yeah, so that's basically most of the things that I want to do today. If we go back to our SPX, very bullish today, in fact, quite strongly. And Bank of America, let's Bank of America again. Do you guys have anything for me? Any questions on the floor, for the floor? Are you guys still with me so far? All right, Bank of America currently facing resistance on the trend line that I've drawn. So 16 October 25 strike. So my portfolio is already loaded with a lot of 25 and 25.5 or 24.5 strikes. So you can see I have 25 expiring this Friday. Next Friday, 25.5 call expiring. This is the call against the position that I have. So currently this call is being threatened as well. And I might have to roll this out and up. And also have a a put at the strike of 24.5 expiring next Friday. So this should be rather safe. And then another 25.5 put for 2nd of October and then 9 October. So basically every other week I'll have a I'll have a Bank of America option that's expiring, and then I can get to profit like 2% for the account. I mean for that position size. Yeah. So and then besides that, I also have EEM and FXI. Oh yeah. So let's go through these two quickly and see if we can take any actions on them. So for EEM and FXI, I have sold calls for against my positions. So you can see I have 200 shares of EEM. My average purchase price was 41.70 for EM, and FXI was, where is FXI? Maybe I should. Yeah. FXI, I have 151. I've always wanted to top up that 50 shares, right, so that I can sell two calls instead of just one call. And I've been doing it via a cash secured put method, but cannot get it all the time. So let's look at FXI first. So FXI has broken down of the moving averages. So it made a low of 42. So this could have been a good time to sell a cash secured put back then. Yeah, but I wasn't paying attention on that day. So yeah, right now, if we were to sell, it seems like it's at the high before reaching the resistance. And I don't know if this is a good time to be selling cash secured put right now. 42 strikes will be 77 cents. Is that worth it? Slightly below 2%, but I can still close one eyes. Yeah. FXI, I have my trade price is still below my trade price. So I'm making a loss on my positions. But this small loss have already been covered up by all the premium that I've recovered so far for in this year. Yeah, so that's the bonus and the plus side of doing the wheel strategies on your options. I mean on your stock holdings. Yeah. Mm, 41, 42 strike. Selling the 42 put, it'll be somewhere here. All right, I'll not take any action on FXI. I'll just wait out and see what happens. Right, and when my sold call expires, I sold a call at 45 strike previously. 45 was way above here. Yeah, so when that expires, which is on the 25th of September next week, then we'll see where the price takes us then. And if possible, then I'll sell another option on that. So that's for FXI. So FXI is a China ETF, so China seems to be worse performing overall as compared to the emerging markets. So this is more of a global ETF, right? And we can see it has been rather trading rather sideways for the past 1 month or so. It hit the 50 SMA, and then right now it gapped up today. So you can say that $45 is somewhat of a resistance. Yeah. Well, you ask what was my SPX? What's my short put? My short put was at 3330. Right? Yeah, 3330. I entered it for $1, and then 20 cents for the long put. So a net profit of 80 cents. So 3350 and 3330. 3350. In fact, 3330 I was already a bit hesitating already because it was not really below the low of it's already touching the low of the previous day. I mean last week's low, right? 3330 is somewhere here. It already cut into the low made last week. And if you look at 3350, it's below the 40 EMA. So yeah, and given today's bullish action, you might say that it is highly unlikely for prices to crash down to really
Market data connection
how you view things for this one. All right, so I hope that's clear. I don't know if there is any connection issues that make anything choppy or all right. So yeah, back to our EM. EM 25th September. So EM, I'm definitely not looking to sell anymore. I'm not looking to sell any more cash secured put because I already have like a 8,000 position on that. So that's really too much. Just nice, I would say, not say too much. I mean, okay, compared to my other position is rather is a one of the bigger ones. Yeah. So I'm not going to add any more EM. I'm just going to do view from now on. Yeah. So let's wait for that to expire and then I'll sell another call. Yeah. So that's for EM. For BAC, all right, let's just place an order for BAC and let's see what happens. Right now, 82, I mean the 25 strike is going for 80 and 81. Let's sell at 81. If we get it, we get it. If not, then that's fate, right? Okay, I'm just gonna leave my order there for it to fill, and I'm not gonna care for it for the rest of the day. Yeah, so we can only hope. Mm, hope with a little bit of analysis on the technical side, right? So yeah, so KB, we are learning options. Which strategy do you think a beginner should start with? So if you are a beginner, then definitely learn about the calls and puts first. So what a call do, what does a put do, and you really need to understand what each of them does. What does buying a put mean? What does buying and selling means for each calls and puts, right? And then only when you understand that, then can you assemble them together to form the different strategies. And therefore, the easiest strategy for a beginner, I would say, would be to use the view strategy on your stock holdings, right? So if you are already investing, do you already have a investment portfolio? If you have, then perhaps look at slowly dollar cost averaging your way into your positions. So for some of the smaller ones, like for example, Bank of America, it only costs 2.5K for 100 shares, right? So slowly accumulate maybe 25 shares a quarter or something like that. Yeah. Then once you have 100 shares, then you can practice selling cash secured puts on your, I mean, cash covered calls on your stock holdings. Yeah. And you can learn how options work, right? You can at the same time you can also figure out all the grids and everything, what is delta and everything. So yeah, and if you have enough capital for the entire 100 shares of stocks that you want to hold. For example, you already have 2.5K in your account sitting there, not doing nothing, and we are all right with owning 100 shares of Bank of America, right? Just for example, then you can go ahead and sell a cash secured put at a strike price that you don't mind owning the shares. Yeah, so anyway, more of those are all explained in this video that you see over here, right? So how to use a view strategy. This has the all the steps outlined. And in the next video, the risk and pitfalls, I talk about the things to look out for. Yeah. Oh, Mohammed, so I guess you didn't catch my reply because of the connection issues. I'm sorry for that. So yeah, for REITs, we do not use the dollar cost, the discounted cash flow. The discounted cash flow valuation, the model is not suitable for REITs. It's also not suitable for banks because of the nature that these companies operate in, right? So for REITs, I will just use the price book, just like banks. But for REITs, the price to net asset valuation. So price to NAV. It's just another name for price to book. Yeah, but basically it's the same. And for Rich, right? So maybe let's just quickly go through a little. So I don't know if he still provides it. So he used to have a weekly, what's that? The not weekly, like I mean occasional checklist of all the different REITs, and then they have the price to net asset valuation. So from there, I'll compare the current price to net asset valuation to the historical price to net valuation. Yeah, yeah, this table over here. So you can go over to .com and then just look for this. So you know that the table over here also color code for you. Yeah, so for this is a rather good source of reference that I come to. And then there was another table, another chart that he posts regularly. All right, never mind. I can't. I think he doesn't post it anymore, or maybe it's yeah. But basically, we use the price to book and price to net asset valuation. We do not use the intrinsic calculator. Yeah, it's the same for US REITs. It's not about Singapore. It's not about the country. It's about the nature of the company and how they operates, right? So generally for REITs, we will use the price to net asset valuation or the price to book. Yeah. So let's say if we go over to O, right? So this is one of the more famous REITs in the US. So yeah, you look at the price to book. But looking at the price to book is one step. The next step will be to compare this price to book to the historical price to book, right? So some REITs they are they are forever overvalued. If you use previously for banks, I said anything one is fair value, right? So 1 to 1.25 is fair value. More than 1.25 is overvalued. Less than 1 is undervalued. But for some of the REITs, right, they are always above 1.25. So they are always always overvalued if you just look at this blind. So what's important is to look back in its history and see what is the range of this price to book. So let's say the range of O, right, is the range of price to book for O is, let's say, maybe 3. The highest price to book it has ever written was 3, and the lowest is, let's say, 2. Then right now you see the price to book is at 2.1. So 2.1 is only somewhere around here, 2.1. So then you can say that, maybe O is getting close to fair valuation, right? Based on the historical, because it has never come into undervalued range before. So we can only use a historical range. And for some REITs, right? US REITs, I don't know where you can get this historical price range. Yeah, so mm, let us know in the comments if things is unclear. So for investing or for trading. And then you said also why Crocs on uptrend. Yeah, so short-term valuations, short-term price action doesn't really off for valuations. So